Welcome back to another episode. Today, we're going to take a closer look at my favorite semiconductor company, Nvidia. We can see the stock is down roughly 3.8% as I am recording, about to break under $400 again. And I do believe it's been a while since we've seen the 300s. I think the last time was in May when we saw that nice price jump up in the company, late May, early June. So, what I want to take a closer look at is, hey, what's happening with the overall market? First, I do want to say it's probably a big tech sell off. We can see a lot of the big semiconductor companies and a lot of tech companies are down right now. But what I also want to do is take a closer look at some of the comments that we heard from the big tech giants that reported earnings already and what they mean for Nvidia. So let's take a closer look in today's episode. So like I mentioned, I do believe first off, we are seeing kind of like a nice tech sell-off. We can see Microsoft is down roughly 3.6%. We have even Intel down roughly 1.5%. AMD is sitting in the $94, $93, down 2%. So we can see it definitely is impacting the overall tech space. And I don't believe there's any necessarily bad news impacting Nvidia, right? It just tends to be trending with the overall market. Now, what I mentioned I wanted to do was take a closer look at what these kind of big tech giants had to say about maybe not necessarily Nvidia in specific, but what they're doing with their capital expenditure and where they're focused their investment in, as this can kind of give us some insight of how the demand is for Nvidia right now.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So we're going to start off here with, I do believe this is Alphabet. Yep, Alphabet. So they did mention that they reported capital expenditure in quarter three was $8 billion, driven by overwhelming by investment in their technical infrastructure, with the largest component for servers, followed by data centers, reflecting a meaningful increase in investments in AI compute. So overall, we can see from Apple right off the bat that they continue to see a strong growth in capital expenditure, and it's mainly focused in the AI market. So that right off the bat, that does bode well for Nvidia. They do mention that the growth in reported cash CAPEX in quarter three is somewhat muted due to the timing of supplier payments, which can cause variability from quarter to quarter. So one thing that's happening here is sometimes the CAPEX might not showcase, or the cash leaving CAPEX might not show the actual numbers, because when there is such a high demand for certain products, like let's say Nvidia's H100, Nvidia doesn't necessarily have the product in hand, or they don't have the solution. So not all the money gets transferred over. Maybe they might be like a prepayment, but they're still waiting for the product to be delivered before maybe they make that full payment, and you actually see that decrease in the cash for Alphabet. But overall, they do mention that they continue to invest meaningfully in the technical infrastructure needed to support the opportunities they see in AI across Alphabet, and expect elevated levels of investment increasing in the fourth quarter of 2023 and continue to grow in 2024. So again, this does bode well for Nvidia and any other kind of semiconductor solution. I do believe the only big players here are probably Nvidia and anybody that might deal with the networking side that does hold a nice amount of market share. Obviously, it does bode well a little bit for maybe the CPU players, but the demand, even just like we've seen, right, for these kind of workloads, you usually have one or two CPUs running roughly 8 GPUs. So right now, it's definitely a GPU market, and that's where a bulk of the investment is going. Now I want to take a closer look at kind of capital expenditures quarterly for Google here. We can see it roughly was $8 billion in the most recent quarter. It does seem to kind of, if we take a closer look at a 5-year, there are some peaks up and downs here when we take a closer look at it. But overall, the trend is on a nice uptrend. And they do mention that quarter four is going to be higher, and they expect 2024 to also be a high year in capital expenditure. So we can see right off the bat, Google is going to continue to invest money not only in Nvidia, but Google also has or Alphabet also has their own semiconductor solutions, like the TPU units that they use for, I believe, inferencing and some other machine learning solutions. Now, I want to take a closer look at Meta. Meta just reported their earnings on October 25th, and they do mention in terms of investment priorities, AI will be their biggest investment area in 2024, both in engineering and compute resource. When we take a closer look at compute resource, right off the bat, you know that that means things like GPUs, another form of semiconductor solutions, either being internally or externally. They do mention that capital expenditure, including principal payments on finance lease, were $6.8 billion, driven by investments in, you guessed it, servers, data centers, and network infrastructure. They do mention that capital expenditures were below the prior levels last year due to lower server and data center construction spend as they prepare to shift to their new data center design, as well as payment timing. Again, the payment timing, I do believe, is because there's such a backlog on Nvidia's H100 solutions that they're not sending the payment right away. So that's obviously lowering the CAPEX a little bit. But overall, they're going to spend that money. It might just be shifted out to another quarter. The other thing is some investors, I do believe, got worried that capital expenditures were below because of lower server and data center construction spend. And this is not new news. If you've been following this channel, you know that Meta, I believe, at the end of Q4, when they kind of talked about efficiency, they did mention that they were going to slow data center construction as they focused on designing a new data center design. This new data center design was going to be focused on, you guessed it, AI solutions, on AI workloads. And the main reason is because AI servers tend to have a lot of GPUs. Those GPUs run hot. You need to work with things like thermal, making sure all the thermals are good. So things like liquid cooling, you need to make sure you create an infrastructure that is able to sustain that type of thermal or heat, first of all, but also that type of power, because the power consumptions of these GPUs are also pretty high. So you're going to make things more efficient to be able to save money, right? So that's the main reason. And they do mention that, hey, look, we are ready to start the shift on the new data centers. So while many investors took this as the bad way, I do believe this is more bullish for Nvidia, because now Meta is going to go back to investing really, really heavy into the data center market. So they did mention roughly $6.8 billion in CAPEX. If we take a closer look, their most recent quarter was $6.2 billion. So that was their last quarter, right? And that was kind of the peak. It does seem like it's going to start to pick back up. But overall, we could see this trend of, in the past 5 years, of Meta's capital expenditure throughout the years. We did see a nice peak in 2022. Like I mentioned, that's when the company was really investing heavily in data centers and AI. So because they invested so heavily in 2022, 2023, they kind of slowed it down a bit as they kind of refined, they kind of reworked themselves, reworked their design, reworked their infrastructure, and we are going to see a nice growth from here. I do believe they shared a little bit more color if we have it. They do mention they expect AI to be the largest area of increased investments as they further invest in generative AI across core products, internal tooling, and research. And they do expect capital expenditure for 2023 to be somewhere between 27 to 29 billion, updated from their prior estimate of 27 to 30 billion. I do believe the $1 billion shortness was for one reason, the kind of capacity that Nvidia has on the H100 right now. It might still be so low that the company is not able to spend that kind of money. And if they don't have enough H100s, then the company is not going to go out there and buy other products, other CPU solutions, until they have a full system. But they do anticipate their full year 2024 capital expenditure to be up to 30 to 35 billion dollars. Those are some crazy numbers, with growth driven by investments in servers, including both non-AI and AI hardware, and in data centers as they ramp up the construction on sites with the new data center architecture they announced late last year. So overall, this bodes well for the company. Now, the final company I want to take a closer look at is Microsoft. And Microsoft does mention that they expect capital expenditure to increase sequentially on a dollar basis, driven by investments in their cloud and AI infrastructure. As a reminder, there can be normal quarterly spend variability in the timing of their cloud infrastructure build-out. So again, a lot of these big tech players just want to warn you that because of the supply chain issue right now, while they are expected to spend this money in the upcoming quarters, maybe there's not enough product out right now, that some of those spending might be shifted out. So maybe one quarter, it might be a little bit lower than expected, but in the upcoming quarter, they'll kind of use that money as long long as there is supply. So overall, I do believe Microsoft is really, again, all three players are expected to spend a lot of money. I do believe Microsoft did update their most recent, yes, we can see capital expenditure for Microsoft in this most recent quarter was 9.9 billion. And Microsoft, we can see this nice uptrend sequentially. I do believe what's going to happen eventually, and this is going to cause some fear for maybe semiconductor investors, is there is going to be a time where we're going to peak here in capital expenditure, and we're going to have to see a small decline. But we can see from prior levels in the past 5 years, even in the past 10 years, that yes, there is a peak, things start to go down, then there is a peak and start to go down, but the lows are always higher than the previous lows, right? So overall, this does bode well for companies like Nvidia. Again, look at this. This is a huge change here happening in the AI space. The real question is this an overhype? Is it going to go up dramatically for maybe a few more quarters and then can drop down dramatically, and it's going to cause bad news for companies like Nvidia? That's for us to wait to see. But I do believe we will be able to tell once we hear a little bit more of how the market is evolving in this space. So something to keep in mind out. I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.